All right, Introduction to Business students. Your professor Nate Sharp here wanted to give you some direction on how you can do your research for your first step on your corporate companion project. So this is a project we will be working on all semester, doing steps in each week's module. And here in this week, you're going to be researching some of the finances of the company, using that for your first discussion post. So what I've got pulled up on the screen here is the discussion questions. I'm going to top line the questions and then show you on my screen how I would actually go about getting answers to those questions. So there's 4 questions. You can see them highlighted in the tan color here. Question 1, how many people does your company employ and what are the annual sales? So 2 parts to that question. We jot that down. All right, we're going to find that. You can see I've also provided some research links here on where you can find this information. Question 2, what's the financial performance of the company? Here we're looking at some basic financial statements, taking us back to our accounting chapter, but we're going to look at the PE ratio and also the net profit margin for the company. And I'll show you a stock site where you can get that information. Question 3 is, how's the company doing with regards to new products and innovation? And then question 4 is, based on your research, what's your assessment of the company's future growth? Are they better, same, or worse than their competitors in this category? So here you don't need research to answer this one. This is your own opinion based on your research. And then your last question, question 5, is replying to 2 other students on this one. So this one's a bigger assignment. It's worth 70 points. So let's tackle the first one here. How many people does your company employ? What are the annual sales? Now, I've provided a list where if they're on the Fortune 500 list, that they'll already have their number of employees and sales, and you can go there. But if they're not on that list, you can also go to the company's website and learn about them from the About Us section. You can also do a Google search on number of employees or annual sales of the company. But here's how I would do it. So the first thing I'm going to do is find out what is the stock symbol for my company. So the stock symbol, and here's Jack in the Box, San Diego company, but it's a truncated abbreviation of the company's corporate name. So here we have Jack in the Box Inc., but their ticker symbol is Jack, J-A-C-K. And if we looked at McDonald's, it'd be MCD. In the old days, they used to print stock quotes on like these telegraph machines, and it'd be on this little tiny ribbon tape, and that's how they got updates on what the stock prices were. Now it's obviously all done digitally, but it's kind of like when you had to truncate your messages on Twitter. You used to have to truncate your company name to get on the ticker tape, and that practice has continued. So they have these shortened names when they're a public company and they get on a stock exchange. They get a stock quote symbol, and that's always an abbreviation of their name. So the first thing you'll need to do is do a Google search. What is the stock symbol for? And then input your company name there, whatever you're looking for. And you'll find their stock symbol here. That search will take you directly to a stock quote, probably Google Finance. And then you'll look down below here. You'll see that Jack in the Box is traded on the NASDAQ. And their symbol is Jack, J-A-C-K. All right, so we got that information. Awesome. Then you're going to go to Google Finance. So to do that, google.com/finance. You see that up here in the upper left. And our first question is going to ask, how many employees do they have and what are their annual sales? Now we may get that on the finance page, we may not. So let's go ahead and type in Jack. And there's Jack in the Box right there. And here's our stock quote for Jack in the Box. You see they're currently trading at $85.33 per share. We're looking for number of employees and annual sales. I don't see it on this first page. I'm going to scroll down to quarterly financials. I don't see it here. I see a button here for more financials, and I'm going to click on that. And ta-da, that tells me here are their sales. I used to work at Jack in the Box, so, and yes, I know Lenny Kama. I remember Lenny Kama. I think he just down actually as being the CEO in 2018. But that's a side note. At any rate, the revenue for Jack in the Box as of January 2020, the revenue $250 million. So year over year, meaning that's annualized over 12 months, they're at $242 million. So you want to jot that number down. I'm going to jot that one down, 242. I don't see number of employees listed anywhere here. So I'm probably going to have to step outside of Google Finance to get that information. But I'm going to stay in this stock quote section for Google Finance because I think there's some other stuff that I need here for the next question. So keep that tab open up here. And let's go and find out how many employees Jack in the Box has. So I'm just going to do a straight up search. How many people does Jack in the Box employ? You can get this from a variety of places. It looks like they have about 22,000. That's of 2013. Jack in the Box number of employees, 2006 to 2020. So get whichever most recent number you can find here. Sometimes you'll end up kind of going into the weeds when you try to look for stuff. Number of employees, here we go. Okay. That's slightly confusing. We got a bunch of adjunct here. One year. Well, I'm not liking these numbers that I'm seeing here. These don't look correct. So I'm going to go with just a straight up Wikipedia reference of about 22,000 employees. That's of 2013. They stay pretty static on their employment rate. So I'm going to go ahead and jot that number down, 22,000 employees. All right. Now this is assets where you're thinking, wait, their sales are this many in billion. No, that's their assets, not their sales. So for question one, going back to the discussion, we now have rooted out the first answers. How many people do they employ? And what are the annual sales? Let's move on to question two. What is the financial performance of the company? Google Finance is going to be our friend here. We already have that open. But what I'm asking for you to gather here is what's the company's price to earnings ratio? And what's their net profit margin for your corporate companion company, mine's Jack in the Box, but also for two direct competitors. So if I'm using Jack in the Box, my direct competitors that I'll choose could be McDonald's, obviously. And then a second one that's publicly traded, like a Wendy's would be another one. And to help you with your commentary on this one, I provided some links on what the PE ratio tells you about a company and what the net profit margin tells you about a company, both of these, especially when comparing them against their competitors. So we're kind of doing an apples to apples comparison on the financial performance of your corporate companion selection compared to some of their direct competitors, okay? So I'm going to go back and I got my marching orders. I need the PE ratio and I need the net profit margin. So I'm going back to Google Finance. Going back to Google Finance, and I'm going to start by looking for the PE ratio, the first item. And right there on the first page, we see the PE ratio here, price to earnings ratio. What is it for Jack in the Box? It's 27.48. What the PE ratio essentially tells you is for every dollar of actual earnings that the company makes, the stock price, in this case at Jack in the Box, is 27.48 times that earnings. So a high PE ratio tells us that investors are betting on that company and the stock price is going up as a result. So it means that people, the stock price is kind of inflated. How inflated is the stock price versus their earnings? For example, if we went and looked at McDonald's and their PE ratio was 100, that means for every dollar of actual earnings that McDonald's is making, the stock price is 100 times that. So you could take some popular stocks like Tesla and Apple and Google, and you see that they have these really high PE ratios. So the PE ratio is kind of a measure of how inflated the stock price is versus the actual earnings of the company. So a high PE ratio isn't necessarily a good thing, and it's not necessarily a bad thing. If you're an investor looking to invest in the fast food industry and you're comparing McDonald's and Jack in the Box and others, you would want to pick the company with the lowest price to earnings ratio, because that means you're getting a better buy based on the actual earnings of the company. So here's Jack in the Box at 27.48 price to earnings ratio. And if we went back and looked at McDonald's, they're on the New York Stock Exchange. I just happen to know that one, McD's. There they are. Their PE ratio is 33.78. So 24 for Jack in the Box, 33 for McDonald's. That means McDonald's stock price is inflated a bit more than Jack in the Box's. It's a premium, it's a multiplier against the actual earnings of the company. So from an investor standpoint, you would probably pick the company with the lowest price to earnings ratio. The lowest PE ratio means this company is the best bargain in relation to their actual earnings. From a company perspective, a high PE ratio, a high stock price in relation to your earnings is good. It means people are betting on your company. It's bidding up the stock price. And if you're an employee, particularly a senior executive, you probably have lots of shares. So you like a high stock price, and having a high PE ratio is a good thing. So there's two sides to how you evaluate the PE ratio. One is from you as a discrete investor, comparing against competitors, which one's the best buy. And the other one is from the company, how inflated is their stock price. As a general rule, when I invested in the stock market, I never bought a stock with a PE ratio above 20. And you can go on motleyfool.com and other investment counseling sites, and they'll tell you their thoughts about PE ratios. And in the assignment, I've also provided some links with additional information about PE ratios. So, and those are listed here. Okay. So you'll get the PE ratio for, in this case, Jack in the Box and also McDonald's. And then the other piece we wanted from our discussion, I know I'm bouncing around here, was the net profit margin. The net profit margin right here. And these links tell you what this means for both PE ratio and net profit margin. So I'm going to go find the net profit margin for Jack in the Box. So here we are back in the main site on Google Finance. We already captured the PE ratio. I'm looking for the net profit margin. I don't see it up here, but if you scroll down to quarterly financials, aha, here's the net profit margin, 13.44%. So that means as revenue flows in to Jack in the Box, say again, let's use $1 for every dollar of revenue that comes in, they're able to keep 13.4 cents of every dollar that comes in. It's a measure of how efficient the company is at squeezing profits out of their actual sales. Are they doing a good job at keeping their costs down, if you will? So 13.4 for Jack in the Box. Let's see how McDonald's is by comparison. Do you think it's going to be higher or lower? McDonald's is huge, right? They're gigantic, they're global. So we would think they'd have some economies of scale by having so many restaurants. So let's see, 13.4 for Jack in the Box, roll the drum. And for McDonald's, 12.86. So they are less profitable than Jack in the Box. And their PE ratio is higher than Jack in the Box. Now, you might think that like I'm endorsing Jack in the Box. I used to work there, and they're a local San Diego company. So yes, of course, I'm a fan of Jack in the Box. But mostly from a financial standpoint, they've got a lower PE ratio versus McDonald's, and they're being more efficient with their profit margin. So they're squeezing more profit out of every dollar that comes in. So to me, that's two signals that they are a better investment as a company. All right, so we've got our first two questions, and these are the kind of commentary that you would write about as you're evaluating your companies. So we did question one, we got the number of employees, we got annual sales. Question two, we've got their financial performance, just a couple of basic metrics, the PE ratio, how inflated is their stock price, net profit margin, how efficient are they with their operations. Let's move on to question three. Question three, how's the company doing with regards to new products and innovation? So this one, you're probably less likely to find the information on Google Finance or another stock quote site. So you might have to dig around a little bit. You can go to the company's website and look for newsroom or investor relations, and they might have some information there. If you go to Google Finance, it also has a news button there. But a common Google search on new product development or new products in development at blankety blank company or new innovations at blankety blank company will provide you with some of that information. So this one you might have to be a little bit of a detective to find out. So I'm going to go and just do a straight Google search about Jack in the Box regarding new products. New products at Jack in the Box. Boom, there you go. And okay, Jack in the Box goes big with 4 new products for this summer. I can click on that. And this is the Jack in the Box website. So now I'm in Jack in the Box. And if you scroll down to the bottom of the company website, jackinthebox.com, and there's going to be some sound here, so I'm going to try to clip that sound. Okay, good, the sound's not running. You can go down to the bottom of the, okay, continue. You can usually find the company's site map. I'm not seeing it here. Okay, so Contact Jack, FAQs, do not sell, careers, corporate site. I'm going to go here. If you look, I'm down here at the bottom right of your screen. I'm going to click on corporate site. I'm going to go on corporate site. And okay, so here's the latest news. So news is a good source where they talk about new products. Jack in the Box is also doing a lot, leaning into social media and doing some pretty cool campaigns during the pandemic. Investors, franchising, real estate, latest news. And here we see all their press releases here. Okay. We can click on press releases, and we're going to get all kinds of news about new products. So at any rate, find some information about new products. This is a fast food company, so obviously they are going to have routinely issuing out new products. And frankly, we see these on their main page. But a Google search will get you this information. And you want this information also for your competitors as well. So question 3, how's the company doing with regards to new product and innovation? If your company is Tesla, obviously it's going to be more robust. And here's some options for how you can search for that information. Question 4, so now you're done with your research, questions 1, 2, and 3. Question 4 is based on your research of the company's finances and products and innovations, what's your overall assessment of their future growth? So this is you kind of recapping it all. And then lastly, you would want to reply to at least 2 other students based on their opinion of their company's future growth based on finances and product innovation. Okay, I've got some screenshots down here. These are actually for Morningstar, but now they've requiring that you pay beyond the trial for Morningstar. So that's why I'm pushing you guys to Google Finance, and I will just place this recording in this assignment in its place So you can use this as your guide for how to search for the information. All right, good luck. Hit me on the Canvas inbox if you have any questions.